You're tuned in to the It's Real podcast with your hosts, Kayla and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 73 of the It's Real podcast. I'm Kayla and I'm a mortgage lender.
And I'm Andrew Yagi. I'm a real estate agent.
Hi, Andrew Yagi. What's going on today?
Well, Kayla, there's a lot of snow on the ground today.
For April? Are you kidding me? It's wild.
I know. It's incredibly wild. And I know that our girls kind of enjoyed having a little bit of a snow day, well, and actually back-to-back snow days.
Yeah.
Just because of the weather and out, there was even someone locally in our area who's kind of having a snowman contest. And I think he had like 60 some people, submit their snowmen to him kind of for judging. And he put them online, which is kind of cool.
Oh, interesting. I love it. So 60 people?
60, I think it was like 61 people.
Wow.
And they had, I'll pull it up really quick because it's really kind of neat. This is a guy who kind of works in the school district. Really neat guy.
Were they all local people that submitted these photos?
They were.
Love that. God, get the community involved. I love that. Did you submit one, Andy? Did you make a snowman?
I didn't. We did take some pictures of the girls, but I did not submit anything. I think probably the competition was pretty fierce probably already, and we could have thrown our hat in the ring, I guess. But now I'm not finding the link, of course, as I'm looking for it. But
when Andy Yagi's your dad, you gotta go all in.
Something like that. I thought I saw some pictures floating around of your pups out enjoying the weather.
Yeah, they love it's like a little cushion for them to play in, you know what I mean? So they love being outside. We had some snow, gosh, was it a couple weeks ago? And out in Lakes Country, and they just love it. They play, they have a good time, but they were running around yesterday, just enjoying it. So I don't mind it because it's not as muddy, but we know that's coming shortly after. So
yeah, it's very much. And I had higher hopes for the weather, and obviously this time of year, weather can be very unpredictable. But I've got a boatload of individuals who are ready to list their homes, and we've been working on scheduling photos. And this week it's like, okay, we've got problems middle of the week, weather-wise. But now it's like, boy, some of these properties are under over a foot of snow. So we may kind of, leave things sit a little bit over the weekend. And I think things will melt pretty quickly, with the right conditions, because obviously it's some pretty heavy, wet snow. But we'll see. Just kind of the beauty of living in our area and the seasons.
It's the beauty of it. I did see some 60s coming up. So your sellers are probably going to be listing probably by end of next week, if worst case.
Yeah. So speaking of real estate and selling and buying, are you still seeing pretty strong demand and things have been pretty busy in the lending world?
Yeah, I think that when I looked back, actually, I'm going to pull up just because I won't show the world, but I'm going to pull up my pipeline from 2022. I feel like this is the busiest that I have been, Andy, since probably 2021. I'm actually going to look right now. I want to double check I mean, what we're closing right now for April based on past closed loans. I mean, even April 2021, we're closing more. So when people say, oh, it's not busy, I really think there's this just this divide right now. You're either doing a lot of business, you are producing, you're giving value, you're educating, or you're on the other side of it as a professional. And right now our team is on the side of we're helping a lot of people. And there's this thing too, and a lot of people don't know this. You of course do, Andy, because you're in the business and you understand. But we as lenders, we see the conversations. We have the conversations. The clients then need to apply. The clients then need to get pre-approved. The clients then need to feel good about the numbers, and then they move forward with purchasing. So we have all of this activity and pent up demand that people haven't even found homes yet. So we're pre-approving people left and right. And some of them are converting while others, maybe the sellers are waiting for the snow to be gone before they list. And, we'll probably see a lot of these people fall into, May, June, July, but it has picked up more than I've seen in years. Heavy on the seller side. What do you see?
Yeah, absolutely. So we are seeing, I would say the same thing. We've kind of reshifted, the focus of our business to focus more on sellers and marketing
Okay.
because that's really where we, excel and working with very
Mhm.
select buyers that are ready to go. There are a lot of
Mhm.
agents out there that, and a lot of brokerages that buy a lot of leads, go to Zillow, Realtor.com, any number of places. And we used to do that too, but we just found that, it wasn't as worthwhile and then our
Mhm.
skill set that we're better at serving clients and on the sales side and just providing a really really great experience. And yeah, I would say that we have seen kind of I'll call it an explosion of client activity here
Mhm.
this spring as well, and we've got a lot of people in the pipeline that are ready to go. Our lake sales, our lake showings are slower than they were last year, which is
Okay.
kind of interesting. We've got quite a number of lake properties listed, and we had a nice burst of weather, and then things have been a little bit challenging. So I think people are just
Mhm.
not really quite in the lake mode either. And then, of course,
Mhm.
the other elephant in the room is the economic situation, which I want to talk about a little bit today too,
Mhm.
especially as we're coming off of President Trump just announcing tariffs, which some are like, well, Trump is going to absolutely kill the economy, and some are saying, well, it's going to be painful for a little while, but in the end, this is going to be a real positive America first
Mhm.
type of thing. So I want to talk a little
Yeah.
bit today, Kayla, too, about how that
Yes.
is going to affect housing.
I love it. And I think too it's a hot topic, and I know there's been a lot of news, with Rocket and Redfin, and
Hmm.
it's just kind of a crazy time of year. The jobs report comes out this week. The spring market's picking up. There's just a lot going on in our world, and I want to touch on that as well.
Yep, absolutely. Well, why don't we start, Kayla? Why don't you give us a little bit of an update on rates and kind of where
Mhm.
rates are at and
Yeah.
where we're sitting today?
Yeah. So rates have been pretty flat. They did come down a little bit yesterday morning. We locked in numerous people yesterday morning, and then we saw in the evening or afternoon, I should say, they picked up a smidge. But we're seeing a 30-year rate at like 675. So that does not mean, again, and we'll go through this in a little bit, but that does not mean that that's the rate you're going to get. You could pay points, you could buy it down if you, depending on your credit score. And I always like to reiterate that because that's just a national average with national big lenders. I'm seeing right now, you'll see VA is, quite lower. You're seeing real low sixes for VA, which is wonderful. And then North Dakota housing hasn't moved at all. We're still seeing like the 595 area. So that's been really great for our first time buyers as well. But I think that there's a lot of volatility right now, Andy, with that jobs report coming out on Friday, with tariffs potentially impacting jobs. Less jobs, meaning higher unemployment rate, is good for mortgage rates because less people are likely to purchase when, obviously they're unemployed or they don't have a job. And so that's what can impact mortgage rates. So I'm really curious to see what tomorrow will bring. And we'll update everybody next in our next episode of kind of what that jobs report says.
Sure. Yeah, that's going to be really interesting. In the
Yeah.
meantime, of course, though, obviously, I think everyone's probably watching and aware, but here from
Yeah.
CNBC, the Dow drops 1,500 points this morning, which I think was kind of expected. S&P 500 loses 4%. Stock market, the tariffs are really affecting things, and so it's going to be really interesting, to see. And in fact, just yesterday, Kayla, I was already having conversations with sellers. I had visited with a couple who, hey, they are looking, to kind of get
Mhm.
into a townhome scenario, kind of what they're eyeing as their last move, get off of their acreage. They're really excited about this potential development, and they need to sell. And already, just with the announcement of tariffs, it kind of said, you know what, we know we're going to have to dip into our savings a little bit to do a few other things. And we might just hold off for now just because, we have fear.
Mhm.
Um, and yeah, there is a lot of fear of the unknown. What do you do? Do you sell? Do you stay? And
Mhm.
even in the market, do you sell or do you just, stay the course and keep investing? Um, and obviously there were a lot of different opinions, but I just kind of I told them more or less that, hey, do your projects that you're looking at doing because your house really is a showpiece, but you have a few more things to do. Let's revisit it in a month when you have those projects done. Let's see where everything's sitting. And let's keep the
Mhm.
conversation going because the best part about individuals like that is they don't need to make a decision today
Right.
or tomorrow, and in fact they don't have to do anything. So
Mhm.
great opportunities come, Kayla, when you don't have to make a
Yeah.
decision and when you can just kind of sit back and kind of watch and
Mhm.
when you've got when you're holding all of the cards, you're in a pretty
Mhm.
good situation.
Yeah, we've had a couple like that too. It's like, do we sell? Do we buy? And it's ultimately I mean, every scenario is different, right? And it's like, what are you hoping for? I have a client that right now he is a stay-at-home dad. He's like, I'm at home all of the time. I'm home all the time. And we just had another baby. We're running out of space. And it's like, some may say they want to spend a lot of money on a home. Some may want to spend a lot of money on a car. Some may want to be savers. It's just so customized to what people want. And it's like, when you have someone in that situation, it's like you really just need to fine tune like what is it that's most important to you. So
Mhm. Yep, right on. Absolutely. And obviously we know why people are motivated, but
mhm,
yeah, it's going to be interesting to see where the year goes. And
that will
along
be.
those lines, I want to focus on this article a little bit today, Kayla, where it talks about April mortgage predictions. How
Mhm.
will tariffs impact spring home buying? Mortgage rates have held fairly steady despite economic turnover, but that could change. So where are rates going to go, Kayla?
Haha. I think they're going to decline this month slightly. I don't feel we're going to see a big shift. I just feel that the jobs report will reflect what we are anticipating, and it's going to be less jobs. Gosh, please put this out before the jobs report actually comes out, Andy. But
It'll
that's
be
what
out today, Kayla.
but that's what I anticipate, and we perhaps will see some trend down. I just don't think we're going to see anything wild. But what do you think?
Well, I think there are going to be a lot of unknowns. I think that this year, Kayla, is going to be slower than last year, as far as volume of homes sold. And I think simply because of all of the fear and uncertainty, at least as I'm looking down the pipe, and studying the market and, reading, from some of the experts that I study, I think the next 6 months are
Yeah,
going to be really, really challenging. But realistically, and there are a lot of people that are blaming like the Trump administration for all of the economic downturn and
yeah,
wrecking the stock market, but realistically, everything has been so artificially propped up
a little
for
bit.
so long, not a
Mhm,
little bit, a lot of it. And
mhm.
so I think, and this isn't even plain politics, but
Right.
looking at all of the fraud and the corruption, and I was sitting in Fargo yesterday. I was actually having lunch with someone. We were at one of our
Neat.
old. It was a quick stop through, so I didn't have time to reach out, although we do need to get together in person and
We
not
will.
just virtually. But I was
Yeah.
sitting at one of our old favorite college hangouts at Labby's having some lunch quick.
Labbies.
And and was just kind of reminiscing about the NDSU days, and we got into a conversation about higher education, and just I think about the cost when we went to school. I can't even remember exactly what tuition was, but it was compared to today affordable. But you start seeing all of these organizations, NDSU and everyone
Yeah.
is really struggling just from the standpoint of trying to get individuals or students in the seats and trying to finance all of
Mhm.
this. I cannot believe, as I've been watching some of the Doge reports, all of the money that some of these universities are getting from the federal government. And especially with, maybe some of the ideology that they're instilling,
Mhm.
and whereas I think of a higher education organization supposed to be, somewhat balanced and
Right.
unbiased. It's absolutely crazy. And I think a lot of this does have to go away. And obviously, concurrently, there's some thoughts that hey, we need some more tariffs, and so I think there's going to be some pain,
Mhm.
Kayla. And kind of as this article points
Mhm.
out, and maybe jumping back to it, there are a lot of questions right now. So I don't think anyone has the answers, but questions over how these duties will upend supply chains
Mhm.
and impact interest rates. There are there's reference in this article talking about mortgage rates, and, investors, of course, waiting for more takeaways and more information. But rates are, of course, linked to the bond market.
Right.
And, more or less, we're probably going to see rates come down. And, this talks about how rates are expected to move towards 6% in 2025. Of course, a
Mhm.
concern here that lower mortgage rates could be the result of a deteriorating economy. If U.S. families are worried about job security and affordable high costs of living, they'll be less likely to take on mortgage debt.
Mhm.
What do you
Mhm.
think about that?
It's just kind of like it's kind of one or the other. It's like, if there's less jobs, then that's great for mortgage rates. But if people don't have jobs, how do they purchase homes? So it's
Mhm.
it's definitely one of those things where I am very curious to see what this year brings. Trump has been in office for what's it been? Not even 2 months, and roughly you'll want to say, and there's been a lot of change, and there's been a lot of nervousness and negativity, but I'm just very curious to see how this plays out for America in the long run. In terms of, I think he's probably playing the long game. You commented this year might be more difficult. Again, I think that there's going to be a lot of lenders and realtors that will stay, a lot that will go. And I think that this year might mimic more of like a 2022 or a 2024. Like 2024 was a hard year. And I think if certain people are stuck on that mindset of renting, or they're in the position like your clients that, they don't have to do anything, I think it's just going to be really interesting to see what plays out here. And I wish we had a crystal ball.
Yeah, I wish if we did, we wouldn't be sitting here doing
True.
this. Well,
True.
maybe we would, but in a different context. But
Yeah.
I think, within the housing market, so I think, existing home sales of, pre-built homes, I think there's still going to be a pretty strong demand because, again, people are relocating, they're needing to
Right.
move up, life circumstances change. So even like in my more immediate market, I think that, sales are going to be strong because we don't have a lot of new construction. I think
Yep.
seasonal homes, lake properties, and the like, I think it's going to be a slower year.
Yep.
And we're seeing people buy, but I mean, it's got to really check all of the boxes. And so I think things that aren't priced appropriately and maybe don't check all the boxes are going to sit. And then I think I'm going to be really interested to watch like the Fargo market, Kayla, where there is a boatload of new construction, and
Yeah.
just to see how that's impacted, because even this article talks a little bit about tariffs and the impact on the housing market. It too says that, hey, it's probably not going to impact prices of existing homes, but is likely to drive up the cost of lumber and building materials. So I would predict there are going to be some home builders that go out of
Yep.
business. There are going to be some that pull way back. There are going to be individuals who put their plans on hold. And I think it's going to be challenging for builders, vendors, everyone just across the
Yeah.
board. It makes me think back to kind of more the 2020, 2021, the COVID times, where I some
Yeah.
developers that I work with and represent, they were locked in and promised prices by their vendors. So they forged ahead, and then at the end of the day, the vendor, maybe left them holding the bag because it really wasn't locked in. So I think it's going to be a little bit of a mess in that regard.
It makes me a little nervous because of the new construction in Fargo. Andy, as you know, there are those special assessments. Our
Yeah.
next episode, we're going to talk about specials in Horace. I want to talk about what happened there. But there's this extra cost that comes along that you just don't anticipate. And depending where you build and depending on the size, I mean, right now to build in Fargo, Moorhead, West Fargo, Horace, you have these specials and that just drives the cost up. And as I told a client yesterday, she called, she said, "Hey, my mortgage payment changed." And I said, "Well," I said, "it looks like your taxes went up. And did your insurance go up?" And she's like, "Yeah, it did." And that's something to remember is, if you're uncomfortable at $4,000 a month, it's probably not going to stay at $4,000 a month. Your principal and interest will if you're in a fixed mortgage, but taxes, specials, they'll go up. So I think with builders, maybe they'll give some incentives. We just did a 2-1 buy down for a client. Maybe there will be some opportunity there to get some of their inventory, sold. But I feel it could absolutely be a little messy, Andy. I kind of agree with you.
Yeah, I think it could be, and not only that, Kayla, but just looking at where the market, is potentially going,
Yeah.
and let's say if we were to see like a rate increase or something, and or just in general, steep mortgage rates, and just talking about the fact that they're going to worsen affordability, but they're also probably going to discourage sellers from listing their homes for sale. Which is going to cut down on the already limited inventory of homes for sale, that we see in so many
Mhm.
marketplaces out there.
Mhm.
So it could be the housing market could
Yeah.
get even tighter.
I have a feeling it's just it's kind of a wild card, but we're here for it. We're here to update the audience and see what happens with us.
Yeah, stay tuned. We'll
Stay tuned.
certainly be watching it and living it day to day, as and the
Yep.
thing to remember, a lot of people will ask, hey, is the market shifting? And the answer is that the market's always shifting.
Always.
I mean, it's always
Mhm.
moving one way or another, impacted by any number of factors. But I think we're going to see, probably a more accelerated shift,
Yep.
as we kind of work through this. But hey,
Mhm. Yep.
stay tuned and hang in there. And
Mhm.
there are options for those that do need to make a move.
And there's always going to be people buying and selling, and it's just a matter of what works for you. And again, going back to what matters to you. Do you want the house? Do you want to afford that? Do you want to, some people don't love their neighborhood. They don't love their small living room, but they want to host. And it's just what matters to you. And anything worth having is going to cost money. And at the end of the day, is it right for you?
Right. Kayla,
Mhm.
I want to talk, not, I want to shift kind of away from tariffs, but kind of, hand in hand a little bit. I, uh, I found this article that talks about how monthly housing payments
Yeah.
hit an all-time high. So it
Mhm.
reached a high just this past week, of about $2,807 for per month, up 5% from a year earlier. So housing costs are soaring for two reasons. One, the
Mhm.
sales price keeps rising. Median home sales up 3% year over year. And the average weekly mortgage rate is 6.67%, more than double the pandemic era lows.
Mhm.
So even though rates have dropped a little bit, monthly payments would be even higher if not for the recent decline in
Mhm.
rates.
Mhm.
Do you see anyone talking about this at all? And I guess just jumping back, you kind of just gave a story about one of your clients.
Yeah, I think that right now people just they only compare what rates were during the pandemic. And how can you not, right? Like you could have had a house then, but one of the things that sticks out to me in that article is talking about how prices increase. We are also seeing when you purchase a home, yes, it's a big liability, but it appreciates. And so I tell people if you purchased 2 years ago, your home would be worth this now. And so if we see rates have been kind of similar to where they've been 2 years ago, the people that have waited are now overpaying. And I don't want to say overpaying, but they're paying more for a home that they could have bought 2 years ago, but they could have also had this liability, this asset that appreciated. They said, what is it? 3% was the sales price. Let's just assume 3% appreciation on a $500,000 home. That's 15 grand a year, And so I can't help but think about that. That's where my mind goes. It goes towards opportunity. But I think that the consumer just absolutely has to just decide to not play that comparison game. Comparison is the thief of joy, right? And it's like, what can you do with a home? What value does it bring? What tax benefits do you have? Like, that's kind of what I think when I read that article, when I see it. But there's a lot, I just hear a lot of comparison and I don't blame the consumer.
Yeah, absolutely. It's certainly challenging. Another piece that I
Mhm.
just want to point out in this article, Kayla, that I found interesting is that sellers are entering the market faster than buyers. New listings of homes for sales are up 7.5% year over year, the biggest increase so far in 2025. If listings continue to rise and mortgage rates continue to decline, we may see pending sales improve in the coming months, but for
Mhm.
tariffs and influence.
Yeah, we'll see. But that I like that piece too. And I think that's been the hard part is first time buyers, they don't necessarily know the difference because they didn't experience purchasing during that time. It's the repeat buyers that are like, I do not want to get rid of this rate for that rate and, basically downsize to have the same payment.
Mhm. Right on.
Mhm.
Kayla, I want to share an article here too, and then I want to talk a little bit more about rates and buy downs and just some of the options that are out there for
Yeah.
people to kind of wrap up the program today. But we have a lot of people in our area. Point in case with our recent snowfall, a lot of people ask, "Why do I live here?" And well, there are a lot of good reasons to live here, but there are a
Well,
lot of people that like to get away on a seasonal basis, and they
a
like to
lot.
go to some warmer climates, whether it's Arizona, Florida, California, whatever. And I found this interesting article on Bigger Pockets, which is kind of like a real estate investor website, where it talks about a secret mortgage blacklist from Fannie Mae as blindsiding condo owners and killing deals. So
Mm.
basically, described as a Fannie Mae maintains secret mortgage blacklist, it refers to a list compiled by the government funded mortgage backer in the wake of the Surfside condo collapse in Florida that killed 98 people. Properties on this list are, in the eyes of Fannie Mae, in need of considerable repairs or do not have adequate insurance. So, a property on this list makes it harder for a buyer to get a mortgage for it. And so
Mhm.
this talked a little bit more about an individual who was, trying to close on a 440 unit, building, and the lender at the 11th hour basically pulled out because they found out that basically Fannie wouldn't take it because it was on a blacklist. Have you ever heard about anything like this
Not
in
necessarily a
in mortgage?
not necessarily a blacklist, but we typically, when we're financing a condo, people need to remember condo, you own just that unit, right? Some have commercial combined with residential. We have to make sure that we get the bylaws, the budget. We have to have them fill out a condo questionnaire. We have to talk about, if there are any repairs. So if that you're at that point, I try to get all that stuff up front. Like we want to make sure before we go forward, we get that information if we need it. And I think in this case, they probably got that condo questionnaire back, or they saw something or repairs or the insurance policy, what have you, and said, oh no, we can't do this. But to me, this sounds like there's actually like Fannie Mae has maybe vetted out some condos and been like, yeah, this will not pass. So that's unfortunate for the buyers but it's also for their protection too.
Sure. Well, I just look at this here where it talks about reasons it could be blacklisted: structural or safety issues,
Mhm.
insufficient financial reserves, legal issues, maybe there's pending litigation, high
Yep.
investor ownership, which makes it less appealing to lenders, inadequate insurance. In
Mhm.
jumping back, they had talked about the case of this Shadow Ridge property, the LA complex blacklisted in December. A Fannie compliant policy was quoted at 2.6 million per year, 10 times its
Whoa.
current amount, making it virtually impossible to sell and prohibitive for people to live there. Think about
Mm.
that.
And like, what do you do in that case if you are living there? And what do you do if like, it's got to be a mess down there. I can't help but assume, especially with all the insurance, policies changing and the hurricanes, I can't imagine. But as if you're currently owning a condo or if you're in that development, I'm just curious, how are you staying there? How are you getting
Right.
insurance? Are you getting insurance? Is it, through the roof? Like, no pun intended, but I can't imagine. I've got a couple condo owners down in Florida, and I have yet to talk to them to see if their insurance has changed, if anything has developed from that. But I personally haven't heard of anyone. I don't know if you have, but it's got to be terrifying. It's got to be a little bit something you're on edge about.
I did hear a story from another client of, they were talking with a friend of theirs who was buying something down in Florida, and they were a cash buyer, so it wasn't a big deal, but
Okay.
they were virtually unable to get insurance in this particular area that was pretty hard hit. But they got a great deal, and they're pretty flush with cash. So I guess in their case, it didn't make a difference. But yeah, this is just something that I think for
Right.
those that are looking, if you're going to go buy a condo or go, have an arrangement in one of these buildings, certainly do your due diligence. It's very important.
I agree. We've got a closing next week down in Florida, not a condo, a purchase, and they were having issues getting insurance, and it was not a condo. And so that's something that I'm telling people up front. Like, before you make an offer, maybe talk to your insurance agent. Let's find that out, because what if the cost, and not necessarily here in Fargo or, in the Minnesota area, but if they're in Florida, we're really encouraging them, just have the conversation maybe before, just to ensure that you're comfortable with that payment.
Yep, right on. I like
Amen.
it. Kayla, before we wrap up today, I want you to talk a little bit about rates and buy downs. And, especially in today's higher interest environment and when people are looking at, affordability in the long run, and we talk about how housing payments are the highest, they just keep going up. And what did we say? They were up 5.3% year over year. There are a lot of people that are freaked out about rates and keeping that monthly
Yeah.
payment affordable, but there are
Mhm.
options for that, correct?
Oh, yes, absolutely. And, I looked at, I keep a lead tracker. I keep, a list of who I talked to and how many people have reached out. And we've talked to about almost 140 people year to date. And one of the questions that I always get, or the things that they tilt their head and they're like, wait, what? What does that mean? Is they don't know that there's options for rates. There's not just one rate for you. It's not like, here's the rate today. There are about 30 different factors that impact your rate. And so people will see, oh, I heard rates are at 6% today, but they don't get the full story of what it takes to get to 6%. So one of the things that I wanted to share today, this has been just such a common theme right now, is people do not understand options. They are working with lenders that say, here's your rate, but they don't explain it. So in this example that we have up, I am showing that today, if you wanted to take a rate, there's quite a few rates here, Andy. There's from 575 to 7375. And so when people say, what's my rate today? It's, well, what rate do you want? And I'm going to explain a little bit about how this works. So if someone said, Kayla, what's the rate today that doesn't cost me anything? Clients will say, well, wait, there's a cost? Yes, there is if you want it. It's optional. So if you said, hey, I want to lock in my rate today, I've got an accepted offer, I want to lock. The no cost, doesn't cost you anything in points, is 6.625. So that sounds great. But maybe some clients are like, I really like the sound of 6.125. So Andy, if we take 6.625, the principal and interest is 25.61 per month. If we look at 6.125, it's 24.30, $131 savings per month. I don't know about you, but I want to save $131 in my monthly mortgage. But if we go to the right, it's going to cost you. It's just like when you want to upgrade to first class, it's going to cost you for that lovely seat with that extra space. So it would cost you $5,000 in points to save $131 a month. Now, the question is, well, is it worth it? The first question I ask my client is, do you have $5,000? A lot of people may not, especially as a first-time buyer. But what I do for my clients is I say, okay, it's going to cost you $5,000 to save $131 a month. When I take that $5,000 divided by 131, that is 38 months. 38 divided by 12 is 3.1 years. I share with my clients, if you plan to be in the home for 3.1 years or have the loan for 3.1 years, meaning you won't refinance until year 3, then it could be worth it. Now, if we are expecting rates to drop in 6 to 12 months and you're going to be refinancing, meaning getting rid of that loan, you are going to refinance before you hit that break even. And thus, it's not worth it. And so I wanted to share today that when you are told shop around for lenders, by the way, you should interview lenders, not shop around, because there's many things you should ask lenders, not just what their rate is. But when you are looking at rates, it is so important to look at what is it costing you for the rate? What are the points? What are the bank or mortgage fees? Because many times I will see a client say, hey, Kayla, your rate's 0.5% higher. I'll share with them to look at their LE, their loan estimate. And sure enough, we'll see that they're paying thousands of dollars that they didn't even know about. So today I wanted to share, there are many options for rates. It just depends upon what's right for you.
Kayla, as I've purchased homes over the years, I've never had a lender ever go through anything like this with me or say, hey, what rate do you want? Whatever. Just like, hey, what's the rate? Oh, it's this. Okay, well, I need to buy the house. Let's just do it. And of course, like when we refinance at 2.375, probably not going to do any sort of buy down in that scenario. But I think the highest rate I had was like 4.625, and even then, maybe not going to. But education is power, and so it would have been good to at least be educated, even though maybe education's not even necessary in that rate range.
But it's funny. I talked to so many people that bought a house and they're like, my lender never told me this. And I can't help but think of how much money did they pay for the rate? How much, what rate could they have had? How much savings could they have had? And if, we talk about saving $132 a month or 131 in that case, over 30 years, that adds up, and it could totally be worth it if you have the loan that long. And it's really about having a conversation with the lender. And if your lender is not talking to you about that, it's terrible, because I think that we share this as the biggest purchase of your life, but it takes time for us lenders. It's time out of our day. But for someone like me, I can't hang up a call without explaining that, because to me, it's something that should be shared with everybody. But again, the consumer doesn't know this. And so that's why I share this. And I hope that people get value out of this, because when you work with me, you're going to get options. Yes, it's a lot. It's overwhelming to hear all these things. But at the end of the day, the client is very, very happy with that information, because they know that they do have those options.
Right. Yeah, I love it. It's so important. Well, and just even the whole process that you use and go through with clients, and just like, hey, like, let's look at your debt. So, there's so
Oh,
much
yeah.
more consumer debt out there, and just how, you can maybe, work some relief into
Mhm.
that through your process, which I really love. And again, I've never heard of anyone else who really does that. So keep up the good work, Kayla
I
Calendar.
I will, Andy. Sometimes I'm tired at the end of the week, but it's worth it when you know in your heart you're helping someone and educating them on, again, the biggest purchase of their life.
Absolutely. Well, I think that wraps up episode 73. We'll call it the tariff and points edition. But
Love it.
uh, Kayla, keep fighting the good fight. I hope you have a
Yeah.
great rest of the week, and we'll see what this jobs report does.
Yeah, we'll see. Stay tuned.
All right. See you,
Yeah.
Kayla.
See ya.